Alright folks, so we are live. So I want to allow the stream to kind of populate a little bit. It's a Monday in Asia, guys. Now it's about almost close to 10 o'clock. Would like to cover a very interesting topic that has been covered before, but I feel that a lot of people still do not know how to identify investment grade or qualify what is an investment grade cryptocurrency, or what is an investment grade investable crypto, right? So Bitcoin and Ethereum clearly are the ones that have shown gradual steady increases in price over time. Now, obviously, if you want to compare the past 3 years to 4 years, you're looking at a huge retracement, right? Close to the all-time highs of 2017. But I wanted to also kind of highlight that it takes a number of years before the market matures and identifies what is clearly investable. And that's the riskiest part, but also the most rewarding part about investing in a new asset class. So allow me to kind of give you a little bit of references, or like current real life assets, right? That were previously just use cases, or stuff that were luxury items, and they became investable. Okay, so a Rolex watch, for example, right, as we know today, is investable. Now, let me kind of build that story up, how it became investable. Now, a lot of people who are clearly collectors are kind of disagree. They don't even share the same views, although they know for a fact that it is part of their portfolio. Okay, they hold a huge amount of watches, right, because they believe in this, or they believe in this particular item, or this item, right? Or they clearly know that they clearly love like watches. They love it as a collection, right? They genuinely identify, they really use it all the time. They make conversations about it, and obviously they enjoy wearing the watches. So firstly, the use cases have been established. Now in crypto, as you know, the use cases are very developer centric. Okay, very developer centric. Nothing really connects us as much to crypto as at this point, really, other than the speculative element. Okay, I just be very frank. Up until Ethereum, right, became a very hot thing due to NFTs, you notice that Ethereum's price kind of seems to be a little bit more sustained. Now you must be thinking, what are you talking about, Ryan? It used to be $4,000, right? And then now it's no longer even $4,000. It's in fact just $1,200 at this point of time. But when we look at the NFTs that are of value, right, and are continuing to hold value, for example, your Bored Basie, right, your Bored Ape Yacht Club. So I'm just trying to find the best examples possible, okay, in a very young market. So please bear with me and don't like immediately judge the references, right? Rolex obviously have hundred over years of experience and market presence and branding, versus of course Bored Ape Yacht Club. So but I'm just trying to give an early example, and hopefully this example, whether it matures well or it expires like milk, I really wouldn't know, but I'm giving you the best possible way to identify. So let's say we take Bored Ape Yacht Club as the most ideal example. You're seeing for the fact that the floor price of most of the apes, right, even at the lower prices, are not transacting below a certain price. Okay, they are transacting, or at least minimally transacting, at probably about 80 to 90. That's the floor price. That means you're looking at per ape about 80 to 90 Ethereum. Okay, that's still 80 to $90,000, given for the fact that these are just digital items. It's a very new concept, right? Of a NFT, a non-fungible token, Okay, and eventually maybe there's going to be more use cases that are going to be opening up for anyone who owns a Bored Ape Yacht Club. Now, versus your Rolex watch, right, that has been around for hundreds of years. Okay, 100 over years. Okay, I think it's 100 years. I think the founding year of Rolex was 1901. Okay, so let's just say that Rolex as a watch, right, functions very well. As a tool watch, it does a lot of things. So since it already functions very well as a tool watch, how is it that a Casio, right, or a Seiko doesn't come to that exact same value, right? How come the prices, for example, an Apple Watch would never go up in value? So there are so many things and comparisons that I can kind of give you. So for example, right, when you cannot control the supply or the demand does, okay, so now you see that's the thing. There's always a high demand for an iWatch. If you notice, the sales are always off the roof, right? For an iWatch, right? And every new reiteration, a new version, will or will not have long queues. But more or less, if you notice, most watches or iWatches or iPhones, right, usually have quite a long queue, especially when there's a new one. Like, come on, like it's an iPhone 13. There's new iWatches coming out probably every year. But you notice that the sales are pretty strong and consistent. Now, I'm not saying that every quarter is going to be solid, right? There can be rip-off versions where the version before has only a small improvement, or people are still yet to acquaint themselves with the brand, right? But it doesn't matter. Right now, you're seeing for the fact that Apple has consistent sales overall. Okay, they have a cult following, so that's the brand has already kind of already established itself in that way. Now, for a Rolex watch, on the other hand, if you notice, there are corrections in the watch market at this point in time. In fact, I would say quite a heavy correction. Okay, you're looking at anywhere from 30, 40 to even not 50%, but 30%. I would say is the average price retracement for most Rolex watches. But if you look from the time when the model was launched at retail price to where they are now, they have already either 2x to even 3x. Okay, but let's just assume that that is a proof of a good store of value, or not only is it a store of value, it's also investable. Whereas if you were to say that if you're holding your oldest version, the earliest version of an iWatch, it clearly doesn't have much value, right? In fact, it probably dropped from the time that you purchased it, or I don't think anyone will even bother to purchase an old iWatch. It just doesn't make sense. Same thing as a Casio, a G-Shock, or maybe just an entry level Seiko. It doesn't have the same investment value. It's not even investment grade, but all have utility, right? All can be used. So this is the part where I want to bring you to crypto. If you think about every crypto as investable, you're gonna be in a world of hurt. Okay, not every crypto is going to give you crazy gains, and neither are they investable. From a speculative standpoint, yes. Okay, so I'm gonna take you back to the watch world again. If you look at the time when Panerai was hot, okay, when Panerai was a hot watch, when Hublot was a hot watch, those were considered speculatively investable, right? Speculatively. You would see that the prices would continue to go up. There was a hot demand because at the time, they were the hottest stuff, right? Somehow, the look of it aesthetically, it's still a watch. From a utility standpoint, it's still a watch. But you look at it, people were looking for something new, something fresh. Hence, Hublot and Panerai were probably the ones that came in and they did their job. But where are they now? They are clearly not the market leaders in terms of sales, in terms of price, in terms of investment grade, nothing. They do not hold their value well, except for certain models. But across the board, if you look at Audemars Piguet, if you look at Rolex, if you look at Patek, these are the market leaders. And of course, you even have some smaller but also very, very credible watch brands. For example, you look at Vacheron, right? those are the god tier, top tier kind of watches, right, that have been holding value over time. Okay, and not only that, they are very highly sought after in auction houses. Now, I'm just trying to piece everything together for you guys. So for crypto, we are clearly not there yet. Okay, why are we not there? Because as a token, right, to be frank, nobody, especially us retail consumers, right, we cannot appreciate the token. We cannot really use it. There's no utility. But because of what Bored Ape Yacht Club did, suddenly that token, right, is suddenly a utility for us as consumers, because we can probably use the BASI for not only just a flex, but we are identifying us as part of a community, say an NFT community, that we are kind of forward thinking, we are the new generation, potentially even opening up in IRL events, right? If you are able to kind of show that you have this NFT, you are able to be invited to an event or whatever, or even a networking session that could open up more opportunities. Suddenly, not only do people want to hold it, right, but they don't want to sell it even when it's dropping, because apart from the price drop, it's still of value. Do you see the difference now? So that's the part where you try to identify what becomes investable. To me, suddenly it has a utility. That means from an Ethereum token, you buy a Bored Ape Yacht Club monkey, right? And suddenly it gives you this whole entry level experience, or a new experience. So that's where it becomes very important to me already, right? So I was thinking very long and hard. If this bear market was an opportunity for me to buy crypto, I would look for the fact that, are there cryptocurrencies or crypto assets that could potentially give me this level of utility as a consumer? I don't want to keep thinking that every single token that has a community, utility, or use case is going to go up in value. The use case is irrelevant if people are not valuing it the same way. So now I'm going to share another level of utility, which is the very simple credits in your shopping app. Okay, credits in your shopping app have utility, don't they? But do they actually go up in value? No. The reason why you are topping up that account, okay, you get benefits for using that shopping platform, but you're actually just using the credits clearly to transition so that you can buy the item that you want. Most cryptocurrencies actually are going to be functioning in that manner. That means they don't have to be going up in value. You see, it doesn't have to go up in value. It just gives you a certain level of enjoyment, and you are utilizing the platform. Notice every single founder that when I speak to them, majority, 99% of them will say, we are only focused on the utility of our, and the use case, and the actual product use. The products, the solution is important. They are not concerned about the token price. They want to make sure that their platform works well. That's the difference, right? So once that has been established, right, whether or not on the secondary market, which is the speculative aspect, it goes up or down, is irrelevant to the founders. Yes, now this is the part where it's a little bit painful. If you enjoy using the platform, okay, and it serves that actual use case, which is not the token going up or down, okay, which is unfortunately not the token going up or down, but it serves its purpose as a platform, and it works well, the developers or the founding team has done their job because it works well. Sorry, it's a little bit dark. I need to turn on the lights a bit. Yeah, so right now, right, if you're looking at use case and investable, okay, they are two different things. Clearly, as you can see, right, not everything is going to be in that direction. So be very, very careful when you are making an assessment about whether or not a token is going to be an investment grade or just purely a platform that will serve a use case purpose, a consumer purpose, or a business solution going forward. Be very, very mindful, because right now, when any token is being issued, right, they don't provide any level of equity. So now I'm going to go to Apple. Now, if you are an Apple shareholder, you're going to love it when Apple does extremely well on their sales, right? Because that equates to potential higher profits year on year, and the price earnings will go up for the shares, right? That is good for you as a shareholder. But if you are a consumer, you are enjoying the experience of using the products. You are not enjoying any price appreciation or any investable benefit. There's no investment benefit for you. You're not you can say that you are investing in all these products. Also, from another standpoint, as someone who is a consumer, maybe you need these products to help you in your job or your content creation, or you are somewhat able to use all these products for your work. Then I would say, yeah, it's investment. But when I'm talking about dollars and cents here, right? So you have to think whether or not a cryptocurrency, if you're building this portfolio of yours, right, does it make sense to you to own these cryptocurrencies in your portfolio? That's why when I did a previous video asking, should we even invest in Bitcoin? Like, when you invest in Bitcoin, it has to serve a inflationary hedge, for example, but it's not doing that, right? Because it's dropping. But perhaps it is. If we have been holding Bitcoin long enough, right, we are actually doing pretty well against inflation. We are doing pretty well because right now Bitcoin is $20,000, right? So if you were someone who bought Bitcoin when it was $300, $400, $1,000, you have already did a very, very good multiple. And whether or not inflation is going up, you are not whether interest rates are going up, you are not concerned. Now, another thing where it's a little bit more simple, even if you're not in crypto, are you having assets that are continuously generating an income for you, right? And the only assets that I can clearly think of that are going to do very well in this market, are straight up property that is continuously, whether is it commercial or a residential property that is continuously bringing in a rental income for you, or you have a business that allows you to rent maybe cars, or you're renting out stuff. Rental will do extremely well in this market. So when you think about it, and the other one is of course bonds, right? Any government bonds, right, will do extremely well, right? Government bonds will do extremely well as the interest rates are going up. Those are the kinds. But the question here is, where as an average consumer, right, where do you have that amount of money that you can park aside, not touch it, when you still have living expenses? So that's the part where you have to balance out. It's a very personal thing. Now, another aspect when it just came to mind, why people have been going aggressively into stablecoin investments and only to get hurt. Because the stablecoins, although they promise a return, but the consumer base isn't strong enough to sustain the payouts that are promised, right? If the payouts are able to be sustained, right, then your stablecoin solution works pretty well. But in this scenario, in this current environment, it clearly shows that it doesn't work, because most of the assets, right, that are being acquired by all these DeFi platforms, whether centralized or decentralized, okay, they're all because of the nature of the fact that they're not properly regulated, okay, and they're not approved by a central regulatory within the country. All the asset classes that they can acquire seem to be crypto related, and when the crypto market comes down, there's a huge devaluation in that risk matrix. From there, you will see for the fact that a lot of them are actually unwinding and have to deleverage or even default on the payouts, the reward payouts, and of course default on actually paying out to their investors at a stipulated date. It's just like bonds, right? If you have a bond with the government or a bond with a corporate company, they are promising you not only an interest payment, but the principal that you invested, or the initial capital that you invested with them, at a stipulated tenor. That means after that, when the maturity date happens, they have to give you your principal back, because you are actually lending. Sorry, you are actually lending them. You are actually lending them the money. Okay, and they are borrowing from you. So this is why it's very important that you identify all these little things before making a decision on how you want to form your investable crypto portfolio. Anyway, guys, that is all I have for the stream. Hope you guys enjoyed hope you enjoyed your weekend, and do a lot of thinking, especially in this bear market. The opportunities are there. Just make sure you stay safe, and like I said, this video is just purely for educational purposes, and always do your own research. Take care and see you in the next live stream.